Roberta Lynch, and you're watching Medfield.tv.
Access to our community.
Welcome to Simply Legal. I'm your host, Geraldine Warren, a longtime Medfield resident and a practicing attorney here in Medfield. Each month, Simply Legal presents a topic that we hope you find not just interesting, but also useful. And today will not be an exception. Today we're going to present the ins and outs of buying a home. I am very fortunate today to have with me Candy Petrus from Century 21 and Patrick O'Reilly from Residential Mortgage Services. Before we begin, though, I'd like to welcome them.
Thank
and
you.
also have Candy tell us a little bit about herself, and then Pat, if you would do the same.
I am a resident of Medfield as well, one of the top real estate agents in Medfield. I work for Century 21 Commonwealth. I've been in the business for a little over 12 years and have really enjoyed working in residential sales. And before that, I came from the software industry and run a business that is very successful in the town of Medfield.
And you, Pat, you want to tell the viewers a little bit about yourself?
Sure. I work for Residential Mortgage Services. It's a relatively small New England-based mortgage company with 35 branches throughout New England. I manage the branch in Braintree. I originate my own loans, and I manage a group of loan officers, about 12 or so. Prior to that, I worked for JP Morgan Chase, and I had a bunch of offices, and I really started the mortgage business right out of college 5 years ago, 25 years ago, and 30 years ago now. So I enjoy it.
That's great. Now, when we're looking at the ins and outs of buying and selling, I think we'll first start with Candy, since she'll be in the front line of that, and we have both the seller and the buyer. So let's start with the seller, Candy. When someone's starting to think about either buying their first home or downsizing or getting their bigger home, what do you suggest that they start to think about doing?
Well, if they're going to sell a home, first they need to work to figure out what they need to do to get their home on the market. A big piece of that is making sure that the house is decluttered, going through and having all of the systems of the house updated so that when they go through a home inspection, there's not any inspection issues. Once they start that process, they should interview realtors, and I highly recommend that they look at an experienced realtor that sells a lot of real estate in their town, that they go with an agency that's known not just in the town, but on a national and a global level, because a real estate agency that is known nationally is going to bring in relocation buyers, and that's important. Do a pre-home inspection to make sure that, again, there's no inspection issues. Once they determine who their realtor is, they should choose that realtor from their marketing plan, the activities that they're going to do to actually get the home sold, to just pick a real estate agent that maybe is a friend probably isn't a good idea. Make sure that that person really knows how to sell the house, market it, do postcards, do open houses, all the activities that make sure that the house is out there and known that it's on the market.
Now, when you were saying something about the seller and getting their house ready, are there any new certification requirements with regards to smoke detectors?
That's a good question. You don't have to have the certification until you close, and it's called a fire cert, and it's for smoke and carbon monoxide. So that's one piece that is new over the last few years is you used to not have to have those carbon monoxide detectors, and now you have to have them. On new construction, for example, they now require that all new construction is hardwired, where older homes, it's not required that the smoke detectors are hardwired. Depending on the year of the home, when it was built, there's different requirements for the smoke detector. So I recommend that you talk with your realtor as well as the fire department to find out what they require before you go pay for that smoke certificate.
Now, one other question with the seller and getting ready to sell. What about if they're on septic? Do you recommend that they get that, taken care of prior to it
That's
going?
another good question. I highly recommend that you do that before you put the house on the market to make sure you know if you need to replace your septic system.
And that would be a Title V?
Yeah, it's called a Title V, and it's a day process. It's nothing big, and it's not a huge expense. You're going to have to expect to spend around $500-600, and your realtor will have some people that she or he will recommend that will come out and do it fairly quick and know how to work through the town as far as getting the certification.
Okay, now let's look at the buyer. Now, when you're looking at the buyer, what would you suggest that they first do when they're thinking about purchasing their home?
Oh, first thing is find a good mortgage broker and get pre-approved. They can do that through their buyer's agent. They need to find a good, strong buyer's agent that knows the market, and that buyer's agent will probably have 2 or 3 names that they recommend. Someone like Patrick, get them connected and get their pre-approval to find out what they can afford. It's different what they get pre-approved for versus what they can actually afford. And that mortgage broker, if they really know what they're talking about, will know, look, this is what you should spend on a mortgage versus this is what you can get pre-approved for. And I think you can talk more
Yeah,
about that.
I think, I just wanted to bring that over to Pat. So some people talk about pre-approval versus pre-qualification. Can you kind of tell the viewers what the difference is between those two things?
Right, it's a big difference, Geraldine. It's a pre-qualification is essentially when the buyer or the borrower talks to a mortgage person. It could be really anyone. They may not run a credit. They may not look at income, docs, assets. So essentially, you're approving someone subject to whatever they tell you over the phone, and that sort of allows the consumer or the buyer to sort of conduct their own knee surgery, and you can't really have that. So the best way to do it is, as Candy said, is to get with an experienced mortgage person and actually supply your income, asset docs, run a credit, and it really should go to an underwriter. And an underwriter is the one who's going to really sign the file so that an experienced realtor will see the difference. And the approval, the pre-approval, real pre-approval, should be subject only to an appraisal. And it's really important.
The thing to add to that from a real estate agent's perspective, most agents don't take a pre-qualification. They only want a pre-approval. If you're in a bidding war situation or making an offer on a house, you want to make sure that your financial package that you give to the seller is something that the seller is going to feel comfortable with. So Patrick's
That's a good point.
advice of getting underwriting to sign off on it is fantastic.
Now, is there a difference between if you're purchasing a condo versus purchasing a home? Do you want to address that first, and then we'll ask Pat about the mortgage end of that?
Yeah, that's another very good question, because condos versus a home, there's different paper requirements, there's different mortgage requirements. So it's actually easier to do a single family home, although for someone who's just entering the market or maybe they're downsizing, a townhouse is a good way to go. But before they buy that house, that townhouse, they need to talk with their mortgage broker and get the condo docs over to their lawyer to review them, to
Make sure that the condo association is solvent and has the money behind it, and that the fees aren't too much to add on to it. And
there's mortgage requirements.
And then,
that
I wanted to ask Pat about the mortgage requirements with regards to a condo.
Right. So it's a twofold process. On a single-family home, you're really approving the borrower, and of course you're doing an appraisal, et cetera, et cetera. But on a condo, you get a condo questionnaire filled out, and without getting too detailed, there's a few things you're looking at. You're looking at percent owner occupancy. You're looking at, if it's new construction, sales velocity to make sure that there are enough units under agreement. You're looking to make sure that there's proper walls-in coverage for insurance. So you need to make sure that when you send the questionnaire that the homeowners association will verify that the percent of people that are late on their condo fees, because the homeowner or the buyer has to understand they're sort of into shared ownership. And so this sort of approval sort of protects them also. And it's a little bit different.
Okay. Now, you know, the other question I had with regards to mortgages specifically would be the FHA. Because I know that there are FHA loans out there that help people because the percentage requirement for putting money down isn't as high as some other mortgage lenders might be. Can you maybe explain to the viewers the difference?
Right, well, anyone can get an FHA loan, there's no income restrictions, and the main advantage on an FHA loan is that it's really 3.5% down, and the entire 3.5% can be a gift. So, and then there's a little bit more liberal qualifying guidelines. So it's a good way for a borrower who does not, is really almost all of the down payment is a gift to get in. Also, if you have some credit dings, there's ways to get in without getting hit on the pricing side. Downside to an FHA loan, there's what they call mortgage insurance premium. And it's a federal government program, and so you get hit two ways. The monthly, what they call PMI, is more expensive than conventional PMI. And then also there's what they call an upfront MIP, mortgage insurance premium you have to pay that everyone finances. So it's not the cheapest product, but it gets people into home ownership. And the other program is mass housing. Mass housing is another option. There's an income max in Norfolk County of a person's income can't be more than $123,120. Again, that's 3% down. You can have 100% of the down payment can be a gift. And in addition, there's not many multis in Medfield, but for owner-occupied, you can buy a 2-family, 3-family, or 4-family with only 5% down. So again, there's another sort of way to get in. It's not the cheapest rate or payment, but it gets someone into the market.
So we're still talking about the pre-approval stage. So I just want to ask one more question before we move on to maybe the P&S stage that you would probably work with your person next is, what about if you're self-employed? Now, how would that affect you with regards to getting pre-approval? Or?
Right. Yeah. Self-employed is a little bit different. We love borrowers who have worked for 10 years and they're a scientist and they have just straight salary and all the money's in a passbook account and there's no large deposits and all's well in the world, and it just doesn't happen that way. So if someone's self-employed, technically speaking, and I'm sure most of the viewers understand that, you know, the underwriting has tightened up a lot.
Yes.
With the secondary market and Fannie Mae, and there's a new thing out there, it's called QM, qualified mortgage. And you have to look at the person's ability to repay, ATR. And essentially what will happen is you have to be self-employed for 2 years. And you're going to have to supply tax returns. You're going to need, it doesn't need to be audited, but you'll need a year-to-date P&L. But the general rule of thumb is 2 years. You can get around that if a person had like an affiliated business where they were working in software and now they're a consultant in the same industry with sort of the same client base. You might be able to make an exception for less than 2, but it's a little more difficult. And then you have to look at, is the person Schedule C? Are they 1120S? You know, how are they filing, et cetera? So again, it kind of goes back to, I think, the pre-approval. It's so important now for the consumer to pick a mortgage person, sit down, say, gee, I'm in the market, I hope to go with you. They supply all their data. It gets rid of all those problems when the pressure's off before they're in the offer stage and they really feel rushed. It's the best way to do it with the least amount of pressure.
Yeah, you don't know how many times I've carted someone around and found out later because they're self-employed they can't get a mortgage for another 6 months.
Right.
So it's really important to get in touch with a good mortgage broker.
So now we're already pre-approved, and I think we're at the offer stage now. So what would you do next? And just to tell the viewers, what would be the next step?
Okay, so first we would go out shopping and figure out, that's the fun part. We go out shopping and we figure out where, what town, what kind of house they're looking for. neighborhood, busy road, all of that. So we try and narrow down the scope of their search. Then they find a house and they fall in love. We want to buy this house. So we write up an offer. We need the pre-approval letter. We submit it to the listing agent, and we start negotiating out the offer. Keep in mind that every offer, typically you go back a good 2 to 3 times before you get all the terms set on what you're buying. That's the big thing. You think, oh, I'm going to offer $450,000 for a house. You're probably going to move a little bit on the price, and you're going to move on closing dates because it's 2 parties coming together. Mm-hmm. Once we come together and everyone signs on the dotted line, we have a contract. And that's the piece that you might want to talk a little bit to, Geraldine, because mm-hmm. I think that a lot of buyers don't understand that, oh, I've got an offer. I put $1,000 down to bind that offer, but I can back out anytime. And that's not necessarily the case.
That is true. Unless there's something in the offer that it gets them an out, that it is a binding contract. Yes. There's been consideration given, and it is a contract. Usually the offer doesn't have the kind of earnest money that a purchase and sale would have. Yeah. So if in fact something happened and the buyer couldn't go through with it, they're usually not giving up as much as if they can't get out of the contract because of the wording. Like I would, depending on who I would be representing, if I was representing the seller, I would want to get that money for the seller, and yep. if I was representing the buyer, I would try to find a way out of the contract for the buyer.
Sure.
But then we would get to the purchase and sale. Let's say the offer's accepted. So now we're drawing up the purchase and sale agreement. A lot of times, I know for myself, at that stage, the realtor will come to me and say, okay, this is the purchase and sale. Once again, just for me, just to lightly go over it, I would look at it if I'm representing the seller on whether, what the dates are, if it's too much time that the buyer wants to get the to get the mortgage contingency, when is the closing, when is the building inspection, and those kind of things I'd be looking for the seller. And then on the buyer side, I'd be looking for them on the other side to see, okay, let's give him as much time as he can get to get the mortgage contingency and, those kind of terms. Yeah. So you're looking at it for both sides, who you're protecting, for me as an attorney. But let's say we have the purchase and sale sign.
So the purchase and sale, so we get through the offer stage. So that's about 10 to 14 days. You write up the offer's accepted. While you and the other attorney are working on drafting up the purchase and sale, out in the field, we're working with the buyer to get them through the home inspection. Mm-hmm. And figure out if this is a house that they really want to buy. You want to make sure that you get a really good home inspector that's going to really educate them on what they're buying. I've seen some home inspectors that come through and they get through the home inspection in about an hour, and I really feel like, wow, that he didn't educate them on what they're buying. So a good home inspection should last at least 2 hours, probably closer to 3 hours. Once we get through that, if there's any inspection issues, we work with the seller and the buyer to resolve those inspection issues. We come to agreement, and then we come back to the lawyers who've been working on the purchase and sale and say, okay, here's the 4 inspection items that the seller has agreed to fix. Then the attorneys work on how are we legally going to write that into the purchase and sale so that's everyone's right. protected.
Do you find that now with the building inspectors, there's a lot more requirements for them to go through their little checklist? Yes. It seems to me that maybe there's a little bit more that the government is requiring and that yes. states are requiring. Do you want to just address some of those changes in the home inspection?
There's a lot more certifications that a home inspector has to go through, but the other thing is home inspectors are being a lot more careful these days because they don't want to get sued. They want to make sure that they educate that buyer on every single thing that is happening in the house. There are inspectors that have minor certifications, and then there's other inspectors that have a whole plethora of certifications. So I would really urge a buyer to talk to their real estate agent about who are good home inspectors, and then do their own research. Talk to their lawyer. Their lawyer may have a recommendation for someone. Look on the web and understand what their chosen inspector has for a certification.
I agree totally with that. So now we have the purchase and sale. The parties have come to an agreement. You know, one thing I wanted to ask you, Pat, you know, sometimes people talk about mortgage company and they talk about banks when they're talking about mortgages. Can you just tell the viewers what the difference is when we're talking about bank versus mortgage company?
Yeah, I've worked for both. For the most part, right now, everyone is underwriting, for the most part, the same, meaning to Fannie Mae guidelines. Banks are selling loans to Fannie and Freddie, as are the mortgage companies. You know, I think working on both sides, I just think that a mortgage company, all the mortgage company does is mortgages. Banks are going to be doing, providing other products. And so without mortgages, the mortgage company's out of business. So I think, and also a mortgage company, the company I work for, we're actually a lender. We actually fund the loan. After closing, we will sell the servicing generally within about 6 to 8 weeks. So the consumer will deal with us. So essentially, we are the bank, but we'll have access to other products. And so I think what the consumer gets is a little bit better execution in terms of pricing and a little bit more product variance. So that if you go to a bank sometimes and they may not have a product for this particular condo, or they may have a just sort of funky underwriting, I think it's a mortgage company can just offer more.
Okay, and can you also tell the viewers, I know a lot of people don't understand, like they take out a mortgage and then 6 weeks later, 8 weeks later, they hear that someone else is sending them the bill. Can you explain how that happens, like how, you know, different banks can sell the mortgage to a different company? And
Right. So what people have to understand is that the underlying terms of their mortgage never change. So if someone got a 15-year fixed rate at 3.5, and they started out with residential mortgage services, and ultimately, after a payment or two, they receive a notice in the mail saying that loan is now with Wells Fargo. Well, Wells Fargo is just servicing that loan.
Okay.
So nothing really, and it's often at times that servicing will be sold at a profit, and the loan could be sold 3 or 4 times. For the most part, it really shouldn't matter in where you have your ACH withdrawal or where you send your check. So it's not really a big factor. It shouldn't be.
right, so the viewers shouldn't be concerned.
No, not at all.
Okay,
Not at all.
great. So now we're kind of, I think, did we talk about comps at all? I think that was like earlier on about getting
That's a good
comps
question.
and stuff.
So when a buyer says, I'm ready to buy, a good realtor will run comps so that buyer feels confident that they're getting, they're buying a property that is of value. There's other pieces of comps for sellers. It's comping out their property to make sure that they're putting it on the market for the right price. There is the appraiser that after the purchase and sale is signed, an appraiser comes out to the property and makes sure that it comps out for the bank, which you may want to talk a little bit more about. Right. Appraisals. So there's all different levels of where comps can help in the buyer side, the seller side, the bank. One thing that I make sure of as a buyer's agent, I write right in the offer that the property must appraise, so that makes sure that my buyer actually will be able to get a mortgage, because wouldn't it be horrible if they paid $400,000 for a house and it only appraised out at $300,000, and then it would be hard to get a mortgage. Granted, I think the attorneys help with that too, to make sure that everyone is protected.
Do you want to go ahead and address that as well?
Yeah, I mean, I think from an appraisal standpoint, usually the appraisal problems, quote unquote, in the mortgage side aren't on the sale side. It's really on people refinancing. Mm-hmm. So people says like, gee, my house is worth $400,000. I want to do a cash out refinance for debt consolidation or education or medical, and that's really where the problems come into play, because the appraiser is supposed to, by definition, find comps, and these are really hard, but that have sold within the last 6 months within a mile of the subject property, the same square footage and condition. So on condition, an appraiser will rank it 1 to 6 really. 1 is essentially new construction. 5 and 6 would be homes that need really a gut rehab. So lenders will, for the most part, you see the appraisers will be looking to compare it to similar condition homes, similar square footage, et cetera, et cetera. So most of the problems will be on the refi side, because the consumer may not know exactly, but if they're dealing with an experienced real estate broker, they sort of get a little more grounded as to what they should put their home on the market for, and you don't encounter many appraisal problems on purchases, generally.
Okay, so now we've gotten the purchase and sale, we've had the building inspector, we've gotten the comps done so that they've gotten their mortgage and the contingency, they've gone ahead and through the contingency process, and they've gotten the P&S done. So now we're getting to the closing stage. So now at the closing, I'm sure, at this point, you get the seller's attorney, and it's usually the lender's attorney. The buyers have the lender's attorney, and we do the HUD settlement statement. I don't know if you want to talk about that. I know for myself, I usually do the HUD settlement statement with the lender, whether it's the bank or the mortgage company. The buyer's attorney kind of steps back at that point. Do you want to say anything else about the closing?
Yeah, so we get through the whole process. The buyer gets their mortgage. We're ready to close. A couple of things happen before we reach the closing table from a real estate perspective. We meet the buyer out at the property, and we do a final walkthrough. We make sure that the property is in the same condition as when we put the deal together. Sometimes it's not. And when it's not, we all sit down at the closing table, and the attorneys, figure out how to fix the issue, or the realtors figure out how to fix the issue. Sometimes it's bringing a plumber out to fix a broken pipe. Sometimes it's bigger. But we do that walkthrough, and my recommendation to a buyer is if the property isn't the way it should be, they need to speak up at that moment, because once they close, they're done. They can never go back to that seller, and that piece is huge, because so many people come back later and say, you know what? There is a drip under the sink, and it's still dripping. Well, they've closed. They own it now. So we go to the closing.
And can I just ask, with the walkthrough, what do you find, so just so the viewers can understand, as for the selling part and the buyer part, what is usually a problem in the walkthrough? Is it usually clutter?
Oh, good question. People's junk is not other people's junk. Like one right now that I'm dealing with, the homeowner has left a lot of things that they thought the new family would like. Kids' toys, pool equipment, all of that. They didn't want it. Move it out. Let's get rid of it. It costs money to get rid of it because they've already moved, but the new owners don't want it. So it's clutter. Sometimes it's paint cans. They don't want old paint cans. Maybe they want the exterior paint, but they don't want the interior paint, or vice versa. Get rid of it.
That's a good point. Some people think they're leaving the paint cans to help because they'll know the colors on the
Yeah.
walls, and then someone who's coming in says, "I don't want those colors anyway."
Exactly.
So, yeah,
and it's hard to get rid of paint cans. You have to open up the paint can and let it dry out, all of that. So it's real important for the realtors to make sure that they're communicating, and when we get close to the closing, one of the things that I do as a listing agent is I talk with the sellers and say, is there anything that you were thinking about leaving behind? And then I get with a buyer's agent and cover those items, because I don't want any surprises at the walkthrough.
Okay, great. And with regards to the closing, I know for myself as an attorney, I'm going through the HUD settlement statement. If I'm representing the seller, I'm making sure that, if there was oil in the tank, that they're going to get a credit for that. On the buyer's side, let's say they need to have a water meter reading. They need to have the smoke certification from the seller. There's certain things that, depending on what side you are, that you have to make sure is on the HUD settlement statement. But is there anything you would specifically want to address with regards to that?
Well, I think for the consumer, the main thing is we want to make sure your interest rate is right. The terms of, if you took an adjustable rate mortgage, the index and margin are exactly right. And I would bring your good faith estimate from that you originally get within 3 days of application, and bring that with you to make sure that lines up. So that if the basic closing costs without escrows and per diem interest, let's say, were $3,000.
That's a really good point.
Right, people should look at that, and then and hold someone accountable if that is off. There's going to be certain times where there could be an extra recording fee because it's registered land, and the bank or the mortgage company could not know that. But the attorney fee should match up, the appraisal should match up, et cetera, et cetera. So that's what I would do, and it's a good check.
And then now we have the 1099s that have to be issued also at closing,
Right, right,
which is something that's relatively new too.
right.
Oh, the other thing is,
Go ahead.
I think it's important to make sure that you tell the buyer and the seller to save that HUD statement for their taxes. You don't know how many times I get phone calls after the fact
Because the
saying,
1099 will say a different price than what they actually
It just-
got from the bottom of the HUD statement.
yeah, all of that paperwork is important, but that HUD, it's just so important. The 1099, both of those, keep them together, put them in your tax file, because
Good point,
the
Candy.
CPA is going to ask for them.
That's right.
Right.
Do we have any closing statements, maybe that, Candy, you would want to address the viewers when they're thinking about buying or selling? Especially now with a lot of baby boomers, I find that people are now thinking about, their kids have gone and they're in a house alone and they're thinking maybe I should sell the big house and move to something smaller. So I know that there are a lot of people out there that are thinking about it. So do you want to give anyone
Yeah,
a
I think one of the
closing
things,
idea?
yeah, well, I think one of the things right now is over the last couple of years, the market has been a little more difficult. And things have loosened up. Now is a very good time as a buyer because the market went down and now it's starting to creep up. So if you're thinking about buying, now's the time to do it. As far as a seller, if you want to upgrade, now is the time to upgrade. I was reading an article in the Globe this morning where in the Boston area, the market has, prices have increased a good 20 to 30% over the last year overall. So if you're thinking about making a real estate move, get a good real estate agent, get a good mortgage broker, get a good attorney, a good home inspector, and put your plan together. And any one of those people can help you develop that plan because it's a big purchase. Don't try to do it on your own.
That's a great point for the viewers, because I know as an estate planning attorney, the homes in many instances is their biggest asset.
Yeah.
So good points. And also with you, with closing ideas for the viewers, would you like to just make some comments about what the viewers should think about?
Well, I just think I'd sort of echo Candy's comments. I think that we're in a very interesting industry, is that the fee or the interest rates for the most part from lender to lender or mortgage company to mortgage company are about the same. And with even real estate brokers, so you can get the same level of service, or actually better level of service for the same price. So I would sort of emphasize to people that when they're going through the process, whether it be on the real estate side or the attorney side or the mortgage side, to just think about it in advance, get your ducks in order so that when you do go out and sell or you do go out and buy, everything is covered and you're not in this sort of panic mode where the whole world is ending because we can't close on time. So I think experience is the key.
Well, thank you, Pat, for your closing statements. And I hope that the viewers found this to be very interesting and also very useful. Thank you, Candy. Thank you, Pat, for coming today. Thank you for tuning into Medfield TV.
Production support provided by Medfield.tv. Access to our community.